So what if you could earn more crypto just by, well, holding it? Seriously, it's a strategy that's totally changing the game for long-term investors. We're going to break down exactly how this works, and it all starts with a simple typo that, believe it or not, created an entire crypto philosophy. All right, you have to hear this story. Back in 2013, the crypto market was in a total freefall. And on a Bitcoin forum, one user, probably pretty emotional, posted this message. He famously misspelled holding. He was just so fed up with all the day traders trying to time the market, and he declared his plan was simple. He was just gonna hodl.
And just like that, that typo hodling became an instant legend. I mean, it went from a silly mistake to this powerful rallying cry. It's now a core philosophy for crypto investors who really believe in the long game and are willing to ride out those insane market swings.
So here's the key takeaway. HODLing is all about ignoring the chaotic, short-term noise. This isn't about quick trades. It's a full-on investment strategy, and it's built on this deep conviction that the technology itself has a future, no matter what the price is doing today, tomorrow, or even next week. But, to actually do that, you need a certain kind of mindset. This isn't just about your wallet, it's a psychological game.
So you might be asking, why would anyone do this? Why just sit on your hands while the market is going on a complete roller coaster? Is it just extreme patience, or is it plain stubbornness?
Well, it's actually a pretty smart defense against our own worst instincts, right? HODLing keeps you from panic selling when everything's crashing. But for a lot of people, it goes even deeper than that. It's almost an ideological thing, a stance against traditional finance. They see crypto as this vital alternative to, government economic policies.
Okay, so how does this super patient set it and forget it approach stack up against its hyperactive cousin, active trading?
You can really see the difference here, not just in strategy, but in lifestyle. HODLing is just way less stressful. You're not glued to charts 24/7, and you save a ton of money on transaction fees. Active trading? That's a whole other beast. It's high stress, high fee, and it's all about trying to grab those tiny, short-term profits.
And here's the real kicker. A 2024 study in the Journal of Derivatives and Quantitative Studies looked at 99 different cryptocurrencies. And what did they find? Most of those complex trading strategies, they usually did not beat a simple buy and hold approach. All that extra stress and effort might not even be worth it in the end. But what if HODLing wasn't just a passive waiting game? What if you could actually earn more crypto while you hold? This is where everything changes, where the strategy evolves from just holding on to actively generating an income. Let's see how it's done.
Say hello to the world of staking. With certain cryptocurrencies, you can lock up your tokens to help secure the entire network and validate transactions. And for doing that, for providing that service, the network pays you rewards. It's really the crypto version of earning dividends on a stock. You're literally getting paid to own and support the asset.
Okay, let's look at a real-world example so you can see how this works in practice. We're going to use the Dusk Network, which is a privacy-focused blockchain, as our case study to really break down how these rewards get structured. And this chart really shows you how the whole economic engine works. Dusk's model is specifically designed to incentivize everyone who helps run the network. A massive 70% of the rewards go to the block generators who are doing all the heavy lifting. But it also pays out to validators and even funds its own development. A system like this turns HODLing from a passive act into a productive job.
All right, earning passive income just by HODLing sounds pretty amazing, right? But before you jump in, we gotta have a little reality check. We have to talk about the risks involved. And of course, everyone's favorite subject, taxes.
Look, the HODL strategy isn't without its own set of challenges. Crypto is famous for these long, brutal bear markets where prices can stay low for months, even years. There's always the risk that the project you believe in could just fail entirely, and you have to accept the opportunity cost of missing out on potential short-term gains.
And now let's talk taxes. In the UK, for instance, any profit you make from selling or trading your crypto is subject to capital gains tax. For the 2024-2025 tax year, that's going to be 18% for basic rate taxpayers and 24% for higher rate taxpayers.
Now, this is a really crucial point, and this is where it gets tricky. Not all crypto profits are taxed the same way. Selling or trading your crypto, that's a capital gain. But those staking rewards we were just talking about, the moment you receive them, they're considered income. And that means they're taxed at your regular income tax rate, which can be as high as 45%. And that is a massive distinction you absolutely need to understand.
So we've gone from a passionate typo to a disciplined investment strategy,
And now to an active way of earning an income. HODLing isn't just about holding anymore, it's about participating. And this brings us to one final thought. As HODLing becomes more and more productive, is it fundamentally changing what it even means to be a long-term crypto investor? Do you hold any dividend-earning tokens? Let me know what you think in the comments, and don't forget to like and subscribe for more deep dives into growing your crypto portfolio.